Bitcoin's in the red again. Headlines say panic, but behind the scenes, the big players are just getting started. Let's break down what's really happening and how smart hustlers flip volatility into opportunity. Why the drop? Gold just hit an all-time high, over $3,300 an ounce. That surge pulled attention and capital from crypto. It's not weakness, it's rotation, and institutions are playing chess, not checkers. What are the smart money players doing? They're not selling. In fact, institutional wallets are accumulating more Bitcoin. Just this week, Grayscale added $119 million to their Bitcoin holdings. MicroStrategy bought another 5,500 pieces. And Coinbase says their big clients aren't just hodling, they're patiently waiting for clarity on US regulations. It's not a coincidence that these big players are all based in the States. There's a big story developing around the world's biggest economy and its relationship with crypto. We cover the latest on this every week, so subscribe so you don't miss any updates. Back to the playbook. The big money is also prepping for the next Bitcoin halving, where scarcity meets demand. It has programmed into the protocol that mining rewards will cut in half May 2024, and since supply can't increase, the only way is up. Take a look at this graph. Every halving in history has triggered a major price wave. Volatility before the pump, always part of the pattern. Well, retail sells the dip, hustlers study, plan, and stack. But what does all this mean for you? Let's get out of the weeds for a second and zoom out to first principles. The fact that there is a battle for market share happening right now between gold and crypto tells us one thing: trust is shifting from legacy systems to newer ones, from fiat to code, from noise to signal. And the ones who watch the rotation win the cycle. Gold is up 80% since March 2020. Bitcoin's up more than 200% since then. A wise hustler knows which asset is further ahead of its cycle. And right now, that's definitely crypto. In fact, look at this. Some of the smartest investors are doubling down on the dip. Billionaire Mike Novogratz is buying the dip. Galaxy Digital just announced they added 10,000 Ether to their balance sheet. And Bitcoin's whale rants are showing some interesting behavior. The ones holding between 100 and 1,000 BTC have been accumulating like crazy. This is your reminder to keep the proper perspective. Yes, prices are volatile right now, but this is a normal part of the cycle. Stay focused on your long-term goals. Keep stacking. Don't forget the bigger picture. This is bigger than a price chart. It's about shifting trust from fiat to code, from noise to signal. And the ones who watch the rotation win the cycle. Want to know what I'm watching right now? A few things. First, the gold price. Like I mentioned earlier, it's at an all-time high. Second, I'm keeping tabs on energy prices. Oil just hit a 2-month low, and that could mean more pain for inflation-heavy economies. And third, the US dollar. It's showing no signs of slowing down, which means the Fed might not pivot anytime soon. This is why we're seeing safe haven assets like bonds and gold perform well. And it's also why crypto is taking a bit of a breather. Look, it's not complicated. You don't need to be a genius to understand the basics of supply and demand. And when it comes to navigating these choppy waters, remember, volatility is opportunity. If you see it, if you prepare for it, if you stack through it, you can thrive in any market. This is HustleScope, where strategy meets hustle. See you tomorrow.